Hello guys, welcome to my channel. That's Fred. I'm so excited guys because we had a lot of action yesterday and just during this week the past week we had so much going on in the markets, and those who managed to take their trades, or those who managed to indulge in the market during those times. I think you have seen that we have a lot of opportunities in the market so that we can make money. So, guys, I hope you guys are doing your homeworks. You guys are back testing. You guys are in the markets, in the chat each and every time you get, each and every chance you get, baby. So, thank you very much, man. This is the US Stage Ghost. Thank you for tuning in my channel and selecting that that video so that I can give you my forex content. The way I understand forex, so I can share it with you. And I'm just excited, man. Anyway, my name, like I said, is Your State Ghost. For those who don't know me, Your State Ghost, 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 Ghost. That's my name. That's my name. So you can catch my channel. I think I've selected it. It's called Nasfred, and share with a friend, man. Please like and subscribe. Like and subscribe so that I can keep sharing my knowledge, my forex knowledge with you. So I can keep sharing my forex knowledge with you. So, man, just thank you very much for tuning in. Let's get to it. 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 All right, man. Let's get to it. Let's get to it. So that's my name. And let's start on a high time frame. Let's start on a high time frame and see what had happened. What had happened. I previously had a setup that I made for when we are done with the market correcting, or the way we have the impulse. Uh, so what I was saying that we are in the rally, the rally base. We are in the retracement of the market, right? So when we are done with this, we're looking forward to buying the market going to the upside, because I think we are still going to buy. We are still going to buy. We are still going to buy. So let's get to it. Let's get to it. Let's get to it. Let's get to it. Get to it. Let's get to it. All right. All right. All right. All right. All right. Okay. Mm-hmm. So, guys, the last time we talked, we had the market giving us a reversal pattern just about here. So I was saying that you could join in the market going to downside, or if you wait for your high probability setup going to the upside. So what I was saying is just let the market play out and enjoy the ride going to downside. And also please wait for the setups to go to the upside, because I highly think we are going to buy. We have left some very strong zones that the market had to respect before going to the upside. So what was the market doing? It was just respecting the zones that it had left behind as it was impulsing to the upside, to respect those zones. Zones like high resistance zones, zones like market imbalances, zones like demand zones. So let's mark the zone. Let's mark the zone. Let's mark the zone. This is one of the zones that I'm talking about. This is one of the zones that I am talking about. So you mark at your high time frame, you mark your key level. The key level is whereby the point where the market took or changed the direction once it reached that point. So as you can see, we're in a weekly time frame, and when the market came here, as you can see, first time This is what it did. Second time, it kept on respecting this zone. Yeah, kept on respecting the zone. So as the market impulse to the upside, zones like this are very, very, very important, because this is where the buyers and the sellers were deciding, and they say no, we are taking the market to upside, and say no, we are taking the market to downside. So we know that the market has to respect that zone. And also you have what you call a demand zone. As the market goes up, when you buy, it's a demand. When you sell, it's a supply. So you have supply zones here. You also have market imbalances here that you should identify, so that you know when, like the point where the market would come, where the market is highly likely to come, because it's not a must. It's just you should know that the market, if it's correcting, or if the market is giving me an impulse, a base, where would my base end? Where should market go to cover my imbalances and my demand zones? So, okay, let me do this. So, here we had, right. So here we had the market going to the upside, giving us, we had an impulse, a base, an impulse, base, an impulse, base. So we don't know whether the market is coming here, or what is doing here, or what is happening. So what I'm saying is we are looking forward to buying this market. Our target becoming these highs. Yeah, our target becoming these highs. So this is basically what I believe, not what is going to happen, because you don't know what the market is doing. This is just what you predict. Looking at your your current news, your analysis and all that. So, but let's see. So as you can see, the market came back to our zone that I was talking about. Market came back to these zones. So what you do is, the market would not simply just buy from the zone, because here, if you are a smart money trader, you know that banks use a resistance and support as liquidity. Like they disrespect those zones. When you are here, waiting here, like the market will touch here, and when it touches here, just buy, yes, because there is resistance zone. The market is going to humble you. This is just, as I said to you, when the market is buying, please buy. When the market is selling, please sell. But when it gets to higher time frames like this, you could have caught this sell to the downside, knowing that this is your target. Use this as your target. Like this as your target. Like if I'm selling here, this is my target. This is where I say no. Now I'm waiting for the market to play as it is. When the market is here, I'm not taking any trades until the market confirms or gives me a confirmation that market is reversing, or the market is still going to the downside. So you wait for the market to give you a pattern here, to give you certain things to show that am I proceeding to the downside, or am I reversing to the upside. So but the most interesting part, the part that I'm very interested in, is this part, catching this move. So let's get to our daily time frame. Okay, let's get to our daily time frame. Okay. As you can see, it's a very beautiful impulse, man. It's a very beautiful impulse. So our day time frame, man, what I said is please you just get your time frames, high time frames, then you mark your key levels. Key levels. Key levels. So now we are dealing with this key level and we are setting that it will make something like market will react a certain way to that key level. So you could just go down, mark those zones where the market came touched, like this one, but make sure you change colors, make sure you change colors of those. Let's make this one, say, what's this? Nah, it looks black. Looks black. Oh, screen. Okay, let's make this. This is a daily. This our daily. As you can see, when the market came to the zone, it reacted so many times. You can see here, boom, boom, reacted. Even here, you had an impulse, base, and like a retracement. And then when it came here, it just touched on that and went to the upside. So now you have this zone, and you just had an impulse, base, impulse, base. So what other things we are looking for the impulse going to the upside. Okay. This is how it reacted. As you can see, this is how it reacted. As you can see. So last time we talked about this part. This part. This part. We had an NFP here. We had an NFP. Yeah, we had an NFP here. That was our NFP, first Friday of August. That's where we had an NFP. And I said, all this movement, don't let it scare you. Just wait for the market to give you an entry. Then you look forward to your entry. All right. Okay. So now let's say we had our zones, we have our key levels. So let's get to this part. Let's get to this part. Let me sip my drink first. Excuse my. This sounds. It's windy. It's very windy in our region, man. It's very windy. So yeah, okay, just inside, right? Inside, somewhere inside, inside, yeah, inside. So the first thing we're going to look at here. First thing we're going to look at. We're going to look at three things. We're going to look at three things. Supply and demand, right? And we're looking for imbalances. And we're looking for chart pattern. Only three. Only three, my friend. Only three. Here, at the zone, at this one. This is what we are looking for. This is what we are going to look for at the zones. Huh? That is what you're going to look for. Supply and demand, imbalances, and chart pattern. So what you do is you look for the imbalances of your previous impulse. You look for the imbalances of the previous impulse, right? So you're saying when the market should cover this imbalance, the market should cover this imbalance, and so let's go, man. Let's go, man. Let's go. We had a major break of structure. Major break of structure. And what was it? This was it. This was it. This was it. This was our break of structure. So we had this high, and we had the market breaking that high. That's a break of structure, right? And we have our demand zone. have our demand. So label it POI. Yeah, yeah. Okay. All right. So from there, you know that you have an impulse. So you have to spot your imbalances, right? Then the market gave us a new high. Right? And I want you to be careful with this fake breaks, man. There's fake breaks. So you had a market imbalance from this zone, this zone. Or you could just spot your imbalances on a 1 hour time frame, guys. Okay. Don't have to now do this because but you have from here the market was impulsing and you have a market imbalance there. So this is your imbalance right here. So imbalance right here. So this zone is your market imbalance, right? Okay. Okay. Do you know what you call a hidden base? Do you know a hidden base? Let's mark the zone. Let's mark the zone. If you look at this impulse, if you look at the wicks, if you look at the wicks of this impulse, I want you to see something, right? Just because the market was impulsing to the upside, sometimes it impulses, but it also covers its imbalances. As you can see from here to here, you have this wick. So this candle opened here, covered the imbalance and went up, came back, covered the imbalance. So you don't have any market imbalance from this zone, right? So do this, go to this here, here, and you mark your imbalance, the one that you can identify where there's no wicks covering this space, right? Then you get back to the third candle. This is the first candle, second candle, and this is the third candle, right? Yeah. So this is what you do. So you have a market imbalance, and you have your demand zone, your market imbalance, and your demand zone, right? Right. Okay. So this is one of the important POIs, or one of the zones we can expect the market to come to, and we can look for an entry there, right? So what I'm saying is we have what you call a hiding base, right? Hiding base. So let's look at something. Let's look at this. Would you say this is a break of structure? According to you, would you say this is a break of structure? Okay. If you think it's a break of structure, why? If I said something on the last lesson, I said when you say something is a break of structure, the market should break the zone with a full candle, right? The market should break the zone with a full candle. Okay, so it didn't actually break the zone with a full candle. So what we are saying is we are saying there was a break of structure here. Came, this is more like the same resistance. It came and tested with a full wick and closed below. Went close below, and kept moving to the upside. And which candle was responsible for that? This was the candle that was responsible for that. Yeah, this was the candle, right? And after it broke this structure, it went and came back, as you can see, came back. Let me zoom in so you can see properly. Sorry, man. Let me zoom in so you can see properly. I have eagle eyes. Now I have eagle eyes. So let me make sure that you can see. Right. Well, what I'm saying is this was not really a break of structure, right? A break of structure occurred from this movement, and this is the candle that was responsible for that. So after it broke with a full candle, with a full candle here, it came. This was the opening, and the market came back all the way down here, and you have market moving to. It didn't really touch. It came to your zone. Start. Yeah. Okay. So yeah. So this became your another point of interest. Point of interest. Point of interest. So what I'm saying is, if you've entered the market here, boom, directed to your zone, violated the zone, right? Violated the zone. So you have what you call a hidden base. And if you correctly spot your imbalances in the market, you can see that the market has been covering its imbalances from this movement. No imbalances. But suddenly there was a market gap here, right? There was a market gap here. Wow. Huh? There was a market gap here. This was your market gap right here, my friend. This was your market gap. So this red candle becomes your hidden base. Like, yeah, hidden base. And you have your hidden base, and you have your market imbalance. So what am I saying? What I'm saying is you should carefully identify your imbalance, because that's where you can get your money, and that's where you can also get a quick trades, sniper trades. After the market covered your imbalance, just like the last time, just like that video I showed you, man. When the market suddenly covers your imbalance, it gives you a certain movement to the up to show that it was respecting the imbalance. So you're looking to gain when the market does that. But you should not hold for that long, because you're not certain that the market will sustain itself from that imbalance. So let's move to our 1 hour time frame, right? Let's move to our 1 hour time frame. But before that, let's go to, we're looking at market imbalance, yeah? But before that, let's go to our EV. This is what we are looking for. This is what you're looking at. So the market came, impulse. I'm sorry about that. Market came, gave you an impulse, new high, trace, gave you a higher high, give you a low, failure swing, The market failed to break that. So came back, broke your low, came back, broke, came back, came. As you can see. Yeah. So just wanted to understand that. So what are we saying? Market gave us a high. Gave us a high. Okay. This is considered a double top, right? Okay. This is considered as a double top. Market gave you a high, gave you a low. Market gave you a low, right? It gave you a double top, or it failed to break the high, and you know what the market does? The market, most of the time, when it fails to break the previous high, it goes down to break your low to get momentum to try to go to the upside. But it broke, and this was your change of character. This was a change of character. This is your change of character here. On a 4 time frame, yeah, we're going to go down to a small time frame to see what exactly happened. But this is the whole idea. On a 4 hour time frame, this is where you see your market imbalances. And what do you say? We look for our supply zone. Since this is our sales, we're looking for our supply zone. The candle that broke this low, right? And which one would it be? It becomes the previous candle before this movement right here. Came back up, and I would say this one. I'll say this one right here. Say this one right there. Okay, say this one right there. Okay. Now, you're not certain of what happened, but you know the market, and this is candle that broke, and you want to see exactly what really happened on a smaller time frame, which means it's our 1 hour time frame. From here, you go to your 1 hour time frame. Right. So 60 minutes. 60 minutes. Okay. Okay. So the market went to the downside, gave us a low, goes upside, and was our highest high, right? So this is a break of structure, and this is the low that gave us that high, right? Okay. Now what happened? What happened to that low? What happened to that low? It was broken down. It was violated. Draw was violated by which candle? By this candle right here. This candle right there. But that candle right there. This is basic SMC, guys. This is not miracles. I'm not doing miracles. I'm not, just know what you're doing when you get to the market. So what are you saying? We're saying we have a break of structure here, which now becomes our change of character. Hmm? You get it? Get it? Which now becomes our this was the market was moving to the upside, giving you a lower high, no, a higher low. I'm sorry, a higher low, higher low, higher low, higher low, higher low. Right. Instead of the market coming back to give you another higher low, what did the market do? So here, you're not certain of, I'm not certain what happened here, but you have the market coming back, giving you another low. This is a low true thing. But this is the most important low because it's the one that gave us this high, right? It was broken down here. Now you're certain that the market is moving to the downside, right? And what are you saying? We're identifying your supply and demand, you identify your chart pattern, and you're identifying your imbalances. Now let's look for our imbalance. From here, you can see there's a market imbalance here, here, and here. First candle and third candle, right? So mark your imbalance. This is your imbalance right there. That's your imbalance right there. That's your imbalance right there. Okay. Also, get to that's also imbalance. This is a market imbalance. This is a market imbalance. And the rule about trading imbalances is you look for the 50% of the market imbalance. That's where you place your entries. Because let me show you something. Let me show you something. Let me show you something. Show you something. All right. Okay, let me show you something, guys. When you have a market imbalance like this, so I'm so slow to draw this. But when you have Right. When you identify your market imbalance like this, right? This is your third candle, and this is your first candle, right? When you identify your market imbalance like this, you take this. Let me show you guys something, guys. Let me show you something. Right. Take this. This is called the gun box, ne? This is called the gun box. So what you do is you measure the imbalance. Mhm. You measure the imbalance, right? And you look for the 50% of that imbalance, right? Look for the 50% of that imbalance. So the 50% now you have what you call a discount area and a premium area. Just like the retracement, you have what you call a discount area and the premium area. So this is our premium zone, and this is our discount zone. We're looking forward to seeing the market coming back to right. We're looking for something like this. We're looking for something like this. When the market is in your premium, there's still a lot of imbalances not covered, right? So the moment the market starts to move to your 50%, your demand, your discount zone, that's where you take entries. So now you are risking the market from this zone, from here to aiming this highs, whatever you're aiming for, and this becomes your stop your what you call stop loss, right? So you don't take entries the moment the market reaches your imbalance, because then what's the use of an imbalance? Because this is your imbalance. It hasn't actually covered your imbalance. So you wait for the market to actually move to your discount zone before you take entries. And when it gets to your discount zone, that's where you take your entries. Do you understand each other? Okay, okay, okay. Then that's how you take your imbalance entries. This is very important, guys, because we are going to use it where we are right there. And let me just go, man. Just go. Forget it. Okay, guys, our session is about to end, man. We can't take that long. And please, 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 I'll post another second part of this. There's a lot to do, man. There's a lot to do. There's a lot to do, guys. And I just wanted to show you how you're going to take this entry. How you're going to take this entry right here. So now that we have a market imbalance at the top, now we are saying, okay, we have a zone, you have a supply zone, yes, but there's a market imbalance because this is a correction. The function of the correction is to cover the imbalance before the market moves, takes an impulse. It covers the whole imbalance. Okay, right. And then we say, got no use for this. So zooming in, zooming in, zooming in, so that you can get a clearer picture. You can get a clearer picture of what we are talking about. Go to your no, no, I'm sorry, I'm sorry, I'm sorry, I'm sorry. Go to your, let's edit, let's edit, let's edit, let's edit, let's edit. Okay. Go to your gun box. Gun box. I don't know how you spell it, but however you spell it. Then boom. Then boom. Okay. What are we saying? What are we saying? We are saying from here, you mark your 50% line. Mark your 50% line. And the market will come, touch your imbalance box, but then goes. So now you are risking market from this zone, from here. Now you are risking. This is what you call risk management, guys. You should know your risk management. Just above, just above, just above, just above. And what is your target? What is your target? That low. This one here. It's called the 90% rule. It's called the 90% rule. It's called the 90% rule. Okay. Yes. It's a lot of work. A lot of work. So what I said was we also look for what you call chart patterns. As the market was going to the reverse into the upside, we are actually looking for that chart pattern that says, yeah, no, this one, I can get something from it. So this was the low. From this impulse, we have this low. And we have this low. And this is the low, man. Right. Or just take it like this. You see there? Here. Yeah. Where the bridge can just start. Like, okay. So we're like, no, this is just a rejection. So this was our first touch. Then this is, this is valid like this, right? It's valid like this. This is a fake out, right? It's valid like this. So touch, and it finally broke your trend line. So the trend line retest, and you're saying, what are you saying? What are you saying? You have this zone as a strong zone, right? And you have this low, which is our. Came here, check. And when you enter here, or when you wait for the retest, this is how you enter your trend line retest. It's called a trend line retest. It's called a trend line retest. You're looking forward to seeing the market respecting this, right? Respecting this. So you can wait. I'm sorry about that. Sorry about that. I don't know what it's doing. So the market broke your trend line, retested. Wait for it, come back to properly retest. Can be patient in the market to see, because this is a very strong zone here. The market has to come to this zone. This is a very strong zone, guys. It's a very strong zone here. You can just mark it like this. You can just mark it like this. Okay, just mark it like this, right? Mark it like this. Okay. We are certain that we are in an impulse mode. The market is impulsing to the downside. And what are you saying? What I'm saying is, when you get to the zone, you're saying this retest of support, this is a retest of my trend line. So I'm looking forward to risk from this zone to here. Okay. And also you see that the market has also had covered your support. So you can just risk to this just in case, but your aim is your look left. Look left becomes your aim, which means that anything that happens becomes your take profits. Yo, There's a lot of money in the market, guys. But thank you very much. This is the Estate to Ghost. Thank you for joining me in this lesson. And I believe if we continue to um, check my channel and become family, you can make money in the markets. Please do your homework. Please learn. Please learn. Practice your skill. All it takes is skill and psychology. Something that we don't talk about is the psychology part of the market. Please practice your psychology. Be very disciplined when you get to the market. Don't just enter the market like you're playing cards or you're just be very disciplined. When you are disciplined, some things like this you can easily catch. Imbalances, hidden imbalances like this. Imbalances like this. When you're playing, when you're just rest, when you're just like, I don't know, man, you can catch this. But if you are really into forex and you want to turn forex into a business, a proper business, you can make money, and I'm certain you will make money. So, guys, good luck in your trading. Good luck in everything that you do. May you prosper in everything that you do and everything that you touch, because skill and psychology and discipline, that's the goal. That's where you make money. Be disciplined. Anyway, thank you, guys. I appreciate you being here with me. And love. It's all love, baby. It's all love. It's all love. Yes, stay to Ghost. Nas Fred, catch me wherever, and we in. Thank you very much.